If somebody says to you, so what about the price? I think I can get a gram. I can get grams cheaper. When they say that to you, did they actually say, no, I disagree with you and I'm not listening anymore? I don't think so. Or what about if somebody says to you, why would I buy bullion instead of coins? Why would I buy bullion? If they ask you that question, anywhere in that question, have you heard, no, I disagree. I don't want to do business with you and I'm not buying this. I certainly don't hear the word no in that. If somebody were to say to you, well, I've actually heard this one a couple of times. So how do I know this is real? And how do I know I'm actually going to get my gold? So if somebody says to you, how do I know this is real? How do I know I'm actually going to get the gold? Is that a no? I don't think so. And what if somebody were to ask you, so who are your competitors anyway? And I've heard that one a couple of times, and it's really not an objection. And people just saying, what's our marketplace? And I think that's a good thing to do. We should understand the market that we operate in. But the point that I want to make here is that there is a very big difference between a statement or a question. Like, what's the price? I can get it cheaper. Is that a statement or is that a no? It's a statement. I think I can get it cheaper. Why would I buy bullion instead of coins? Is that an objection? No, it's a question. It's a question which requires clarification. How do I know this is real and I'm actually going to get my hands on this gold from this company in Germany? Is that an objection? No, it's a question. It's a request for clarification or a request for information. And so once we understand what the true nature of these things are, we can actually begin to relax a little bit because people aren't arguing with us. They're really just looking for some clarification. So I want to help you through a few of these things here today and really help us get our heads wrapped around this, because in my opinion and in my experience, these are not objections. These are just simply, hey, listen, I just want some more information. Help me understand. So if we now know that objections, or these things that we perceive to be objections, are not really objections. What typical training says, well, somebody says, I can get it for a better price. And they say, well, go ahead. If you challenge these statements, you force people to start defending their statements. And all of a sudden you turn something that was nothing all of a sudden back into something. So you don't challenge it. Listen, so here, I got a great little rule, and I've been doing this for about 20 years. I've practiced it. I perfected it. And it just simply goes like this. Well, I think I can get it for a better price. Or how do I know this is for real? And I want you to repeat after me, just sitting in front of your television screens or your computer screens. Just say this under your breath. I see. I understand. Hey, I can appreciate that. I see. I understand. I can appreciate that. So if somebody says to me, well, I can get it for a better price. Hey, you know what? I can appreciate that. When I first started this business, I thought the same thing too. Well, how do I know this is for real? You know what? I understand exactly where you're coming from. When I first started here, I thought the same thing. So, I see, I understand, and all you're going to do is acknowledge that you've heard what they've just simply said, but we don't need to challenge it. Now, I want you, if you're taking notes, write this down. People respond in kind. People respond in kind. So what does that mean? It means if you're wound up, they're wound up. If you're not confident in what you're saying, they're not confident in what they're hearing. If you're calm, cool, and relaxed, they're calm, cool, and relaxed. And so my advice to you here, my encouragement to you is this. Listen, when you hear these things like how much, what about the price, all these sorts of things, just chill out, relax. Now try this. Just say it to yourself. I see. I understand. Hey, you know what? I can appreciate that. And you just take down the tone of your voice, you diffuse it, you don't handle it, you just simply acknowledge it and you start to neutralize it. But yet these questions will be asked. So what I would like to do for the first part of what I'm going to deal with here, I want to deal with some of these questions and help you around some of the answers. So one of the biggest questions we hear all over and over again is this whole thing about price. And somebody, well, I just went online and I just saw the price of gold, and your Karatbars gold is at 62 euros today, and I can get it for 46 bucks. And I said, I understand. I actually understand. And because when I first started this business and before I really understood the nature of grams, I thought the same thing too. So I want to help you understand a couple of things about where price comes from. First of all, I want to talk about this whole issue of spot price, okay? Because here's the truth and here's the reality. The spot price is actually, it's based on a lot of things, but this is the price at which, if you were to take physical delivery of gold, that is the price that buyers and sellers have settled on at the end of the trading day on the commodity exchange in New York, London, Shanghai, Hong Kong, and Singapore. Okay. None of us trade, not you, not me. We as individual consumers, we do not trade on the commodity exchange. Okay. That is the price that's agreed on by large institutional buyers and the refiners themselves. And there's lots of ingredients that go into figuring out what the spot price is going to be. But just suffice it to say that you and me, we never get it. But I promise you, I never get the spot price. So here's what the spot price is. The spot price is based on what's called the futures commodity price, which based on what they think is coming out of the ground and people exercising their futures and shorting the market and doing all these other sorts of things, combined with all the paper gold. Now, here's what I want you to understand, okay? There is a very big difference between physical gold and the spot price of gold and actual gold. And here's what's going on. One of the ways that the market price is being manipulated, first of all, you have physical gold, which is being pulled out of the ground. But secondly, you've got the traders out there that are trading in these things called ETFs. An ETF is an exchange traded fund. Now, we all know what fiat currency is. You want to know what a gold ETF is? It's a fiat gold. That's all it is. It's fiat gold. And the current number is this. There are 350 paper contracts to every single ounce of gold out there. And every time the central bank wants to push down the price of gold to make the dollar look strong, okay, what they do is they flood the market with a bunch of ETFs. Now, here's what's happening. As our economies continue to weaken, people are now saying, hey, and by the way, the reason why they can get away with this is because most of these ETF contracts never settle in physical gold. They settle in cash at a future point in time, usually 3 months out. So it's the flooding of the market of these paper contracts that reduce down this so-called spot price of gold that you and I never get. But what's beginning to happen now is the world is beginning to wake up at what's going on around us. People are no longer accepting ETFs, and we've got 300. If there are 350 claims on each ounce of gold, what's beginning to happen now, those people with these claims are beginning to say, I don't want to settle in cash, I want to take physical delivery. And what that's doing now is it's starting to put a squeeze on the amount of physical gold available in the marketplace. And in fact, in markets like India and in China and in Russia right now, gold is selling for several multiples above the spot price. So first of all, you and I never get the spot price. The second thing that happens, which I like to explain to people, and by the time I explain it, they usually get, okay, now I get it. Because what happens is we start educating somebody about gold. We talk to them about Karatbars. They see some of our informational videos. They go, they watch the videos. They come to the webinars. They start learning about the true nature of fiat currency and why gold is holding its value. We do this whole education. Then the next thing they do is they go onto the internet. They Google up gold price. And what do they see? They see the spot price for gold. And then they say, well, how many grams go into an ounce? And they say, okay, it takes 31.1 grams to make an ounce. So they take whatever that spot price is, divide it by 31.1, and they say, well, that's what the price of them should be. No. Okay. So here's the second thing. First of all, none of us get the spot price. And you can't price grams by ounces. Okay, so here's the thing. I've in my lifetime, I have consumed and purchased a lot of gold, and I have some 100-ounce bars. I've got some 10-ounce bars. I've got 1-ounce bars, and I've also got grams, lots of grams that I've accumulated through Karatbars. And I'll tell you this: when I go to the dealer and I buy a 10-ounce bar of gold, I get a better price. I don't get the spot price. Okay, I never get the spot price. It doesn't exist. Before I even go into this, let me explain what the chain of gold looks like. First of all, here's how the price of gold really gets arrived at. First of all, somebody owns a mine in Peru or in Canada or in Australia or somewhere in Africa, and so someone digs a hole and starts stripping out the ground, and they find veins of ore. Okay, so the ore gets pulled out of the mine, and then the miner basically sells that raw ore either to a tolling operation, which shakes it out and gets the rocks off of it, or sends it directly over to the refiner. Okay, the price at which the ore from the ground goes to the refiner is just slightly below the spot price, which is why we're seeing more and more gold production happening now, because the spot price is rising relative to these currencies, which is now making it interesting for miners to ramp up their production. Okay, so ore comes out of the ground. It gets sold to the refiner at a price literally just a couple of percentage points below whatever the spot price is. It goes into the refiner. The refiner melts it down, extracts all the impurities, okay, turns it into pure gold. Okay, there's several grades, so I'm not going to get into 4.9s, 3.9s, 2.9s. We have 4.9s gold, the best gold out there. Then the refiner takes that and it puts it into bricks. They put it into 100-ounce bars, kilo-size bars, 10 ounces, 1 ounces, and yes, even grams. Okay, then the gold from the refiner goes over to the wholesaler or the distributor or the institutional buyer, which could be HSBC Bank, it could be the Federal Reserve, it could be any one of these large institutional buyers. None of us are that. And then that from the refiner to the institutional buyer, it usually settles out slightly above the spot price, because now we're dealing with pure gold. And then from the refiner, it hits the wholesaler or the bullion dealer, and then the bullion dealer also has to put a margin on it. So by the time it gets out into the retail channel, it's been touched 6 or 7 times, and that's why it's never at the spot price. So now that we understand that, okay, so there is a daily price for gold, and it is related to the spot price, but none of us ever get it. All right, now, anything purchased in quantity, you're going to get a better price per unit of measure than anything bought in a smaller quantity. And the example I give 2 examples. I mean, I'm a cheesehead. I'm not from Wisconsin, but man, I love my cheese. And if I go off and buy a 5-pound brick of cheese, my price per ounce is less than if I buy a 2-pound brick of cheese. But if I buy a 2-pound brick of cheese, I'm going to pay more by the ounce than I did for the 5, but I'm going to pay less by the ounce if I only buy a 1-pound brick of cheese. Okay, and on and on and on we go. If I buy a half-pound brick of cheese, I'm going to pay more per ounce than if I bought a pound. Same thing with milk. Okay, it takes 4 quarts to make a milk, to make a gallon of milk. Your price per gallon, okay, is going to be less than if you buy 4 quarts. Anything in quantity, because it has to be manufactured, it needs to be packaged, it neneeds to be shipped, it needs to be distributed, it needs to be retailed, all of these things. It's no different with gold. Okay, when you buy a 100-ounce bar of gold, your price per ounce will be higher than the spot price, but it will be less than if you buy a 10-ounce bar of gold. If you buy a 10-ounce bar of gold, your price per ounce will be less than if you buy a 5-ounce bar of gold. And if you buy a 5-ounce bar of gold, your price per ounce will be less than if you buy 1 ounce. And if you buy an ounce, you're going to pay less per ounce than if you buy by the gram. Listen, now think about these Karatbars. Every single one of these things needs to be refined. It needs to be minted. It needs to be stamped. It needs to be serial numbered. It needs to be encased in a plastic card to put the security features on it. It needs to have the hologram technology on it. And I don't care where you're buying it. You will never, ever, ever get 31 grams of gold for the price of an ounce. It will always cost you more no matter where you get it. So, and I encourage people to go test that theory. I've tested it myself countless times. Okay, so there's the second thing. Now, the third thing is I was actually doing a 3-way a couple nights ago with some people out of Calgary, and I think Monica and your crew, you might even be on here today. Hey, and you'll know this is true. They called me up about 9 o'clock at night, and they had a bunch of questions for me. And one of the questions, brand new affiliate, his question was, he says, well, okay, so he says, I love this whole idea. I get this whole fiat currency thing, but what about the price? And I said, what do you mean, what about the price? He says, well, I just went online and I just found a gram for, I can't remember the exact price he quoted, but I think he said it was like $50 US. I said, really? You found a gram for $50? He said, I sure did. I said, are you online right now? And he said, yes. I said, I want you to go to the website and I want you to go try and buy one. He said, what do you mean? I said, go try and buy one. So he went to the website, he clicked in. I said, here's the thing. They're going to hook you in with a cheap price if you buy multiple grams. Try to buy just 1 or try to buy just 2 and see what happens. And so he did that. And all of a sudden he clicked. He says, you're right. I can't buy just 1. They give me this, they advertise a price, but I can't get it. I think in his case, he said the minimum spend wasn't even by the number of grams. He says, I can't even begin buying grams unless I commit to a minimum of $200, I think was the number that he gave me. So first of all, there's a lot of deceptive stuff going on the internet. You know, and when you look at what Karatbars is, with the security features that are built into it, and we can talk about this a bit more, in terms of the ease of saleability of it, price is absolutely irrelevant. Now, the other thing he said to me was, well, what about the buyback price? I mean, there's a spread between what we buy it for and what we sell it for. So if I buy it today, I'm going to lose money tomorrow. I said, yeah, go down to a bullion dealer. Go buy yourself an ounce of gold today. Go sell it tomorrow and watch what happens. He says there's going to be a spread on that. And it's no different here at Karatbars. But if you have bought into this whole idea of affordable gold and setting up a savings program, you are not going to sell it tomorrow. And if you understand that the buyback price is built upon the spot price, and if we listen to what Bo told us this morning about what's coming down the pipe, and we all understand that, I promise you this, if you'll just begin acquiring affordable gold by the gram, start doing it now, start getting these Karatbars, which we can exchange back through the K exchange, which we can take out through the account to account transfers, which Karatbars will recirculate back without having to find a bullion dealer, or that you can take into a bullion dealer. Okay, when you take all of that into account and you just start saving these things and hanging on to these things, and you wait until you need it, because this is your inflation-proof savings. When you cash that thing, and I'm not going to make any forward-looking statements in terms of where I think the price of gold is going, but I think we're all on the same page here. The buyback price today is absolutely irrelevant, because we are buying the best gold on the planet at a price at a very competitive per gram price when you compare it to like product, okay? And the future buyback price will also rise, and so it absolutely becomes irrelevant. So honestly, there's your first couple of pieces about price, okay? The second question that I got was, well, why would I buy coins? Why would I buy bullion instead of coins? I mean, maybe, or why would I? Yeah, I want coins. I mean, I've always bought coins. Why should I start buying bullion? Well, here's the thing here. So let me help you on this one. Okay, the issue really comes down to this. Coins are considered now. Both coins and bullion are money. Okay, so gold is money. Unequivocally, gold is money. It's always been money. It's 5,000-year history of being money. And I'm also of the opinion that we're going to go back to a gold standard, whatever that next currency is going to be. It will be gold backed. I totally subscribe to that. I totally believe in that. But here's the difference between coins and bullion. It's the difference between legal tender versus a commodity being a negotiable instrument versus a non-negotiable instrument. By the very nature, both coins and bullion derive their value from what's called the melt value. And the melt value is just a term which expresses the quantity and the purity based on the market price. Okay, so both, you can have 4 nines coins and you can have 4 nines bullion, which Karatbars is. Now I want to, but here's the second thing. So here is a 1 ounce Canadian maple leaf coin. Okay, it's 1 ounce. So its melt value today is about $12.25 US, just like an ounce of regular bullion. But here's the thing: every coin, by its very nature, is struck by a sovereign mint. In Canada, it's the Royal Mint. In the States, it's the Treasury, the Federal Reserve, the Treasury Department. All right. Every one of these coins has a face value on it. This one right here, although in pure terms the melt value of this coin is $12.25, it has a face value right here. It says 50 Canadian dollars. What that means is, although today I am free to exchange this for the market price of gold, it has an enforceable, this is called legal tender, and it has an enforceable face value of $50 on it. Now, while they may not be enforcing the face value today, by nature of the fact that it came out of a sovereign mint and it's considered legal tender and it's a negotiable instrument, they can now begin to enforce this. And at some future point, and the reason why they put a low value on this is because they understand the nature of fiat currency. And if they allowed this to have the face value of the true price of gold, people would start hoarding it. And they don't want that to happen. So they float them around. Most people aren't hoarding them. Only 1% of the population has their hands on them. So as much as I love this maple leaf, once I began to understand the distinction between legal tender and a coin struck by a mint versus bullion, which, by the way, is what the central banks use to settle debts amongst themselves. They don't use the coins, they use the bullion, okay? That's the first one. So nobody can impose a face value on my Karatbars bullion. But at some future point in time, the Canadian government, the US government, the Australian government, all other governments that issue these things can enforce the face value. I don't want anything to do with it. Once I understood this, I quit buying it. The second thing is the distinction between negotiable instrument versus a non-negotiable instrument. Gold bullion is non-negotiable. You can take it back and forth across the border. I mean, you have to declare it, but the governments don't care about it. Coins are negotiable instruments, and not only do you need to declare them, but they might actually interfere in them. And I don't have enough time on my segment here to go into this, but I learned a very valuable lesson about 6 months ago. I had a large quantity of gold and silver sitting in the trunk of my car. I crossed the border, and the bottom line was they let me go, but they told me, we don't have a problem with your bullion, we got a problem with the coins. as long as you're hanging on to Karatbars bullion, you got no problem, because although they both have intrinsic same value based on the market price of gold relative to currency, one's negotiable, one's non-negotiable, one's legal tender, and all both are money, one is considered a commodity in the eyes of the government, and you're free to move with it. So, for as far as I'm concerned, it's bullion all the way. Okay. The next question. Is this for real? Like, how do I know that this company's for real? And how do I know that I'm going to get my gold? Like, I've heard that one a few times. And as I did my research for this piece, several people said, I've heard this one too. Is this for real? I mean, how do I know I'm going to get the gold? Well, my answer to that is, I said, you know what? The internet is a beautiful thing. At this moment in time, we have roughly 360,000 affiliates around the globe. Last year, we did 45 million euros in sales, and of that, 20 million were returned to the field in commissions. And lastly, on any given month, we're moving somewhere between 15 and 20 kilos of gold through the Karatbars system. That's 15,000 to 20,000 grams, 1 gram at a time. Now, if you've got 360,000 affiliates, all expecting 20 million in commissions, expecting to move 15,000 grams a month. If people were not receiving their commissions, and if people were not receiving their gold, I tell you what, the internet would be flooded with complaints about it, that this is the biggest scam on the planet. So the first place I would go looking is anybody complaining about non-delivery, and is anybody complaining about non-payment? And as far as I can tell, I can't find any of it. And every time I've said something like that, it has completely satisfied them. So they're legitimate questions that we're getting, but we don't have to get all wound up over them. We have answers for this stuff, So there you go. Now I'm just looking at the clock here. I was given half an hour. We started a little bit late. I want to talk about one more thing. Okay, so two more things. One of the questions that I have frequently heard is, who are your competitors? Now, this is not an objection. Like, I think it's people just trying to understand the market that they're considering to come into with us. So who are our competitors? And my very simple answer to that is, well, I'd be arrogant to say that we don't have any competitors, but I think I'd be more truthful to say that I think any competitor that we have it's a matter of perception. In terms of what we do by providing a completely integrated e-commerce system that operates off the grid, which is completely gold backed, there's nobody else on the planet doing what we're doing. Okay, but if you're looking at it just from a commodity perspective, there's a couple places that you might look. One would be, other bullion dealers, either online or offline. So perceptually, that could be a competitor, but they don't offer any kind of a compensation model. You typically have to buy in larger quantities, and they don't give you the ability to set up any kind of a meaningful savings plan out of it and then return money back to you from which you can enhance your savings. So honestly, bullion dealers, they're not our competitor. They're actually our friend, because they will actually take Karatbars and exchange them into currency. If you walked, and I've tested this. I went down to my bullion guy when I first became a Karatbars affiliate. Walked in one day and I said, "Hey, Darren." He said, "Hey, Howard." And he thought I was about to buy some bullion. And I said, "Not today, Darren. I got a question for you." I said, "Hey, Darren." I said, "Listen, have you ever seen things?" And he said, "What is it?" So I handed it to him. He looked at it. He said, "Nope, never seen one." I said, "Well, my question to you is, if I walked in here one day and I asked you to exchange that back into currency for me, would you give me cash for it?" And he just simply said, "I don't know. Let me see it." So he took it and he looked at it, and I saw him do one of these, and he looked at it. He saw that little hologram thing on there, and he saw the stamp, and then he saw LBMA, and he saw the serial number, he saw the deer. So he looked at that. Now, we all know what the SDNA reader, maybe not all of us, but it's a reader that can test the purity of the gold. Well, most bullion shops have one of these really, really expensive machines in there. He took this thing, he stuck it under his machine, which basically allows him to look at the intrinsic property of the gold, and it gave a reading. I actually watched him do it. Was Hal with me? Maybe Greg Gary was with me one of the days that I did this. Anyway, he put it under the machine, came up 4 9s, and Darren, who had never seen one of these before, in the bullion shop right here in Vancouver, said, "Yep, I'd give you money for that." And I said, "How much?" And he basically said, "Whatever the market price of gold is today is what I'd give you for that." And I went, "Man, I know we got a slam dunk here. This is a winner." The guy's never seen one, and he's instantly willing to convert it back into currency for me. The challenge that you have with other gold, okay, is the fact if it doesn't have these security features on it, good luck liquidating it when you need the cash. What Karatbars has done is absolutely ensure that we can turn this back into currency. So you save them, and you save them, and you save them, and you save them, and you save them. And the whole idea is not to buy them today and get rid of them tomorrow. The idea is to save them and to sit on them. until the storm finally hits our shore, and this becomes your daily spendable gold, either using the K exchange, the account-to-account transfer, the buyback through Karatbars, or you can even walk it into a local bullion shop or a K exchange merchant that just happens to have a storefront in your neighborhood, and they're going to be growing. You'll hear more about that in Los Angeles. But so honestly, we really don't have any competitors. I mean, BitGold is another one. They claim to sell by the gram. They sell by the gram, but you can't sell unless you do it in 10-gram increments. I know some people that have Bitcoin accounts, and it's been a horror story for them trying to sell it back again. So, you know, honestly, I wouldn't go anywhere near that. And so in my opinion, I really don't think we have any competitors. The competitors are really perceived competitors, and people understand what it is that we do with these inflation-proof savings accounts that then provide residual income so that we can accelerate our cash flow and start increasing our savings. This is the most powerful, independent, off-the-grid, fully integrated e-commerce ecosystem backed by gold. That's what we got, and there's nobody else on the planet that's got